Good afternoon, everyone, and welcome to TBR's webcast, Traditional Vendors Entering Cloud Are Accelerating the Pace of Pureplay Portfolio Innovation, recapping performance as reported in our cloud public market landscape reports and profiles, and explaining the factors influencing the public cloud market. My name is Allison Crawford, and I will be your host for today's session. In the next 45 minutes, Analyst Jillian Mirandi and Senior Analyst Allan Krans will walk you through the trends driving the results and how vendors have fared over the last quarter, followed by a Q&A of these trends and how they will affect you. Before I pass this over to Jillian and Allan, there are a few logistics I'd like to cover. First, we'll be recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit this channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A function or the chat function. Allan will address them at the end of the presentation. Or if you'd like to set up a client inquiry for more detailed discussion, please reach out directly to Jillian or Allan at the end of the webinar with the CC to your account executive to set up that discussion. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find the slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. And I'll be providing all the social media links at the end of the broadcast, so if you didn't get them now, don't worry, I'll provide them for you. With that, let me introduce Jillian Mirandi and Allan Krans. Jillian is spearheading our public cloud research and is a lead author on this program. Allan has been covering and writing about the software market for over 7 years and is leading our research coverage in private hybrid cloud. Together, their strategic advice is helping several of our largest cloud vendors identify new opportunities and revenue streams. And with that, let me hand this over to Allan.
Great. Thanks, Allison. And thanks, everybody, for joining. So when we look at cloud, we take a holistic perspective. I'll spend a little bit of time up front here talking about the different views and research streams that we have into the overall cloud market. But I wanted to take a minute to talk about the continuing importance and the evolution of the overall cloud space. We've focused our research over the past 15 years on IT vendors, but cloud is such a disruptive and emerging trend that we're covering it from multiple different angles. So we started, our longest legacy has been covering the public cloud market, and a lot of the content here today will focus on that space. And so we've seen a lot of early adoption, a lot of trial over the past couple of years, and now significant businesses built up around that. That's led to our creation of the public cloud benchmark and a lot of the vendor reports that this presentation will pull from. However, that fits into a broader context, and we are covering other aspects of cloud, including private cloud, hybrid cloud, managed private cloud, and the professional services that are delivered around them. Because when you roll all of that up, there's a tremendous number of entry points, market opportunities, and evolving dynamics within the space. A lot of our customer research has highlighted the shift as customers have moved within public cloud to starting with software as a service, evolving to infrastructure, PaaS, seeing a lot of market growth and a shift in the growth within public cloud. And now we're continuing to see that evolution as it gets into private cloud and ultimately hybrid cloud technology, which is ultimately where we see most customers wanting to shift, planning to shift, and putting the baseline investments in place in order to enable that transition. Now, it's going to take time. As we look at the status of our coverage of the space, public cloud is the most heavily adopted of all cloud technologies and really accounts for a majority of our customer studies and vendor reports. With our customer studies, the third bubble in terms of our research here, we're evolving that to keep pace and stay ahead of where we see the customer market evolving. So we've broken out private cloud separately with that adoption study for this year, as well as broken out hybrid cloud, because it is, although it's earlier on in the market, still a lot of long-term demand there and opportunity over time to both monetize it from the infrastructure side by providing the management security capabilities to enable that transition, as well as from the public cloud side and the service side, so that there are those connection points that enable ultimately the most flexible cloud infrastructure for customers, which is where we see most customers longer term wanting to evolve their infrastructure as it speaks to cloud. So if we look at our overall portfolio, at the top it's the most vendor company specific report. So we're covering individual vendors, doing that either on a quarterly or a semi-annual basis. And we're writing, I believe, up to upwards of 20 of those reports now through our vendor coverage. So every quarter there's at least 10 reports coming out that look specifically at vendor business models within the cloud space. Secondly, a lot of our content comes from part of this research stream. There are the benchmarks that pull in beyond the individual vendor coverage. That collection of leaders in the space, ranging from 10 to 30 or 40, depending upon how consolidated the market is, that represents the most sizable portion of vendor share and pull in the broader industry context and coverage. And the way we're doing that is through the PowerPoint deliverable. You'll see a lot of the slides here today that provide not only some of the numbers, but a lot of the story around them and the qualitative perspective about the trends that are impacting the businesses in these respective markets, as well as the underlying data models on which so much of our analysis is based. So really tying the business results, the investments, the strategies that are at play, telling the story with numbers, and then connecting it to the broader industry context in the PowerPoint deliverables. Lastly, I mentioned our customer adoption reports. We're segmenting them into private cloud, hybrid cloud, and professional services for cloud. And then we're delivering those in 2013 on an ongoing basis. So there's large deliverables for each track twice a year, as well as ongoing topical reports. So each quarter we're sharing our insight from customer research with our clients and keeping pace with the rapid evolution of these markets on a more frequent basis. So on this slide, we're providing a little bit deeper view. I had spoken about some of the breadth of our vendor coverage before, but just to highlight again, we've added 4 or 5 companies just this most recent quarter, and we're going to continue to expand that vendor roster going forward. We have some of our planned additions throughout 2013, but due to the pace of newcomers in this space, we fully anticipate that the number of companies will exceed what we have laid out here. So continuing to evolve to keep track of the most disruptive, the most influential vendors in across all of these cloud spaces. These reports cut across public, private, hybrid, and the professional services aspects. So they really do look holistically at the business models for vendors within the space. For the benchmarks, so we're going to cover a lot of the public cloud with today's presentation. We've added the managed private cloud and professional services already, and then have the components benchmark ready to be added this year. So that'll look at the businesses built around supplying hardware, software, infrastructure into both private enterprise clouds as well as the big public cloud providers, to look at the business in terms of being an arms supplier for actual cloud delivery. So we'll be providing views into the hardware and software businesses that are built around those supply chains. So with that, we've given a pretty good overview of where we see cloud going, our coverage of the space. I'll hand it over to Jillian to go into the content of today's presentation.
Thanks, Allan, and thank you everyone for joining us this afternoon. As Allan mentioned, we do take both a bottoms-up and top-down approach to looking at the cloud market. So in this presentation, we'll focus both on the numbers and on the high-level trends. This graph is from our public cloud market landscape, in which we cover around a third of the public cloud market. We include 37 of the largest vendors in this space, and we're constantly adding new vendors every quarter as they become relevant, as well as subtracting vendors as they roll up into the companies like Salesforce and Microsoft. Currently, the three market leaders, Amazon Web Services, Microsoft, and Salesforce, make up around 50% of our coverage. And we think that this gives an indication of just how new the market is, but the opportunity for growth, as we think it'll reach around over $100 billion by 2017. In the last webinar hosted in January, we discussed the maturing of the public cloud market and how vendors are expanding both their portfolios and solidifying their business models to meet increasing customer demands for tailored solutions across more workloads. Today, we'll dive a bit deeper to discuss the trends around this expansion. We'll talk about portfolio expansion in terms of line of business and vertical flavors of cloud, the expansion of cloud infrastructure, and the expansion of cloud productivity suites to include integration and more social capabilities. This is an overview of where we see the public cloud market today. So this includes public infrastructure as a service, software as a service, and platform as a service. In the market, we see three major groups of leaders. So the first group in the top consists of Dell and SAP. So these companies are more traditional vendors who are getting into the cloud market rapidly through acquisitions. SAP has acquired SuccessFactors and Ariba, which has a cloud business, and Dell has acquired quite a few companies recently, including Aperture, SecureWorks, Boomi from a few years ago, and Stratius earlier this week. The next group of vendors that we see as high-growth vendors are growing through disruption. So these are vendors like Workday and ServiceNow who are targeting large existing customer bases from traditional vendors, including SAP, Oracle, BMC, Microsoft, and IBM, and are giving them cloud-based solutions. And the third group, consisting of Salesforce and Amazon Web Services, they're really the early-to-market leaders and have pulled away from the market. We think they'll continue to expand this gap in 2013 as they're both expanding their portfolios across lines of business, across verticals. But by 2015, we do see companies like Brightscale, ServiceNow, and Workday really beginning to close that gap.
So one of the other things that we think about when looking at the market landscape here is the difference in strategy and current position for the vendors that are included. So we know Dell and SAP as leaders in growth, and growing largely through acquisition, so there's some consistency in the strategy there. However, when you think about their legacy position, SAP obviously as that application solution provider at the tip of the spear in terms of interaction with the customer and the ultimate solution, and Dell largely being on the back-end infrastructure side, wanting to get more out in front of taking a solutions approach, delivering more value in terms of the interaction with the customer, in that both those companies are using cloud acquisitions, but for much different reasons. For SAP, it's about transitioning that control point with customers, using cloud delivery to extend that traditional role for them, whereas with Dell, it's an accelerator for them to compile solutions, get above being a box seller, and look at expanding into, obviously, services, software, big push for them. We put cloud right alongside that in terms of moving them up in terms of the solution stack and increasing the value in what they provide. Cloud is a way for them to accelerate that. And so same strategies, different perspectives and objectives when you look at Dell and SAP. And I think that rings true with a lot of the companies that we have here. Although, for instance, Salesforce and AWS were both market leaders, much different perspectives in terms of where they were coming from, the value that they wanted to target in terms of delivering cloud solutions, just worlds apart, both in terms of how the business is run and the ultimate objective in terms of what they're trying to achieve with their participation in the space.
Over the past few months, a few vendors have really taken it to the next step in terms of expansion into different lines of business and verticals. IBM's acquisition of Connexa, we think, is extremely interesting, as it not only enhances their position in the cloud space, but it also IBM has also entered the application market with this acquisition. So Connexa competes with SuccessFactors, which is now part of SAP, as well as Taleo, which is part of Oracle, and Salesforce.com's Work.com. It's a new area for IBM, and we think the cloud is really, it's a platform for companies like IBM and Dell, as Allan mentioned, to really get into new fields, quicker than they could before. Next is ServiceNow. ServiceNow initially came to market, and they have the same solution for customers across verticals and across segments. We've seen them over the past couple months really go after the public sector. Now, last summer, during the company's IPO, CEO Frank Slootman did note that they would go after the public sector as it's a big growth area for them, and we've really seen them doing that. They currently have their FISMA, the GSA certification, as well as ISO certifications. They have applied for the FedRAMP certification, along with BMC and a Dell partnership. And once they get that, or if they do get that, I think FedRAMP is only certifying 10 or 11 vendors. They'll be able to sell their cloud solutions across the public sector, which will be a huge driver for them. And the last vendor I wanted to highlight in this section is Amazon Web Services. In September, they partnered with NASDAQ to offer FinCloud. So AWS, they have GovCloud, and they have a partnership for FinCloud, and we see them as really adding partners to offer vertically customized clouds. We think they have the capabilities and the resources to do this themselves, but that strategically for them it makes more sense to focus on the infrastructure and building out around that, and to have partners build on their platform to offer these vertical customizations. With that, we'll go into the second point about the SaaS market and the productivity market. So to start, actually, let me orient you to this graph, and my apologies for not doing so before. The y-axis is year-to-year SaaS revenue percentage growth, and the x-axis is year-to-year public SaaS absolute dollar growth. This is of the SaaS market only, and the SaaS market, compared to the infrastructure and PaaS, is definitely the most mature, and therefore the most diverse. So leaders, again, are very different. Salesforce is the absolute growth leader, by quite a bit, and it will continue to do so by expansion. And the percentage growth leaders are still relatively small, but all beginning to gain some traction. Specialty niche vendors include Box, Microsoft, IBM. The makeup is very diverse.
In addition to the diversity of vendors, there's also, when we look at the major segments of public cloud with SaaS, infrastructure, and platform, this is the most diverse in terms of the functionality that's delivered. So it's essentially combining all applications delivered through public cloud including Jillian will touch on some of the productivity analysis that we have on the next slide. But it ranges right up through the core business applications, the CRM, HRM. So much different users for those, much different functionality. So that comes into play when you look at the leaders in this space. Microsoft, a company that has a much more diverse portfolio compared with the Salesforce, although Salesforce has been able to grow to that size even while focusing largely on a single. As the dynamic, it creates the dynamic that we see a tremendous number of new entrants in the space. It's almost a rolling, shifting growth needle in terms of market segments that are expanding. Started with CRM, got into some of the productivity. We've seen a lot of uptick in terms of the HRM, and that leads to a lot of new vendor entrants as well. So as the areas of functionality that customers were comfortable moving forward with, the workloads that were being deployed with public cloud in terms of the business growth shifts throughout different markets and brings in different vendors.
So to dive a little deeper into the productivity space, we've looked at Google, IBM, and Microsoft. Channel investments and integration of social aspects will really remain key areas of focus for these SaaS-based office productivity suites, with the solution integration into different, the acquisition integration, Google Plus integration. There's just a lot going on to really enhance this space. Microsoft, Google, and IBM are enhancing the value proposition of their suites and will expand revenue opportunities for partners with enhanced social networking features. TBR estimates Microsoft is the revenue leader in this space with Office 365. To drive enterprise adoption, Microsoft launched the Cloud Deployment Program for its Microsoft Partner Network in December, which will provide SI partners with training, support, and marketing collateral. Refreshes across this year will deepen integration of acquired social collaboration tools, Yammer and Skype, into Office 365, as well as Dynamics and Lync. This generates more cross-selling opportunities for partners around these different tool sets. Google will monetize apps with tailored portfolios for business, government, and education, and we estimate that they generated around $70 million in the quarter. Google ended its free apps for business service for new customers in the quarter, which again creates more opportunities for ISVs and resellers to charge. Deeper integration with Google Plus video conferencing and Hangouts further enhances the suite's social functionality. Now, Google and Microsoft are coming at the social aspect from pretty different places. We don't think Google Plus will ever be an equivalent to a Facebook or a LinkedIn, but for those Google Apps users, it definitely is a value add. IBM's release of Docs as an add-on solution for its revamped Smart Cloud for social business, formerly Lotus Live, happened in December, and this creates opportunities for resellers and ISVs, again, to generate more consulting and systems integration revenue. So all three of these vendors have a solid base. We think in terms of revenue and adoption, Google probably has just as much adoption as Microsoft, but they haven't been monetizing their portfolio. They've had a lot of free apps, a lot of, we think that they're improving their monetization across this year, and that we'll see a pretty big jump there. And also, all three vendors are heavily relying on partners to get this solution out and to to leave white spaces for these partners to add professional services. Our last point is around the infrastructure as a service market. So this graph, similar to the last one, the x-axis is the absolute dollar growth, and the y-axis is the year-to-year percentage growth. In the infrastructure as a service market, AWS is the clear leader, leaving a pretty wide gap between itself and the rest of the market. A second and third place vendor really haven't emerged yet, and we think that Rackspace has the opportunity to take a leading position based on OpenStack, as well as Fujitsu, who has a more global presence than most of the competitors. Hosting and telco-centric vendors such as Savvis, Dimension Data, Verizon, and at&T also have opportunities to emerge as leaders based on their networking IP and large customer bases they'll be able to cross-sell into. AWS is really differentiating. It began to differentiate as a cloud compute and store, low-cost vendor, but really has gone well above and beyond that with various offerings. It has data warehousing as a service, database as a service, platform as a service. So it really has gone beyond that. But other low-cost vendors, Google and most recently Microsoft, have entered the market, which we think will spur Amazon to expand even more. Fujitsu is leading the public market in Asia Pacific due to its presence and data centers in the region. We think it will maintain a leadership position in APAC for growth, but its growth may slow from competitors such as Amazon, IBM, HP, similarly pursuing the region. However, we do think that APAC will remain Fujitsu's largest opportunity for public cloud. Rackspace and Verizon are also differentiating, but slightly differently. They're differentiating through support for open source. So Rackspace has adopted an open source platform based on OpenStack and looks to drive adoption and loyalty by leveraging its strength in support, as well as by being the first vendor to offer a lot of consulting and partner training around the OpenStack solution. We've seen there's a lot of supporters for OpenStack, IBM, HP, Dell, Cisco, a few hundred at this point. But we haven't seen a lot of partners, they haven't really been training partners to help customers build on these platforms. So we think that Rackspace took a leap of faith by switching to OpenStack, but that it could potentially become the second or third place vendor in the space. Similarly, Verizon recently announced support for Citrix's Cloud Stack, which is an interesting move because not a lot of larger vendors have gone that direction. We think their support for Cloud Stack is really based on Cloud Stack support for Amazon as well as VMware. So a lot of a lot of customers use AWS, and a lot of customers are using VMware for either virtualization or to drive private clouds. So we think that could be a differentiator for Verizon. Again, pretty early on for both vendors to really begin to tell, but we'll be watching them over the year. This slide gets into where the future of infrastructure as a service is going. So it's no longer, there are now a lot of vendors who offer compute and storage as a service. So these vendors have had to differentiate and expand beyond vanilla compute and storage to really drive adoption and to keep their customer base loyal. So first we'll talk about database as a service. And the chart you see below, it's really how vendors are going to market or how they're actually offering the strategy. So Amazon Web Services, Microsoft, Google, they have database as a service baked into their infrastructure. So what they're doing is they're offering customers free trials, getting the customer hooked, and then either extending a free trial from there and charging for compute and storage, or the customer will start paying. And they're able to do this because they have such large customer bases and the vast majority of their revenue outside public cloud, so they can, they essentially can give away these products to get customers. Smaller infrastructure as a service vendors, GoGrid and Joyent, have partnered with database as a service vendors to be able to offer their customers these capabilities. And Rackspace has acquired ObjectRocket, which is a services provider around database as a service MongoDB. To compete against integrated offerings from Amazon, Google, and Microsoft, we think that these smaller vendors, I think GoGrid and Joyent will eventually end up acquiring their partners or really just expanding their partnerships because they, in all honesty, just won't be able to keep competing, if they don't keep up the pace of innovation with companies like Amazon and Google. We think that big data will drive the adoption of these cloud databases, but that, similar to public cloud adoption, they'll face a lot of barriers based on security and regulatory concerns. On the right hand of the slide, there's an Amazon ad for data warehousing as a service. So they're saying that it's 1/10 the cost of a traditional warehouse, which is definitely getting the attention of a lot of customers. So Amazon's database warehousing solution, Redshift, will disrupt on-premise offerings from competitors such as HP and Oracle by delivering these massive cost savings, automating tasks, as well as partnering with leading BI and analytics vendors, including SAP, IBM, and Informatica. With this launch, the company continues to move up the technological stack by just, again, offering well beyond compute and storage and driving a lot of revenue as well as a lot of adoption. Amazon introduced this solution back in November, and it was generally released in February, so we expect to see revenue results by the end of the year. The data warehousing technology is based on analytics startup ParExcel, in which Amazon invested in back in July 2011. The company will extend the services by integrating workloads with tools from a number of BI vendors. We think this partnership will grow, and we also think it's a very mutually beneficial partnership for Amazon and the BI vendors. For BI vendors, they have the backing of Amazon. They can sell into the large customer base, get their name out there. And again, for Amazon, they don't have to build a new solution. They can partner with the best of the best and offer their customers what they want.
Great. Thanks, Jillian. So at this point, that covers the content for based on the 4Q12 public cloud benchmark that we wanted to cover and the trends that we see in the market. At this point, I'll hand it back over to Allison, and we'll open it up for questions.
Great. Thanks, guys. And thanks to those of you who have sent through questions. We have several, so I encourage you to send them through now. And if we don't get to your question today, we will have someone follow up with you. I think we have a couple of clarification questions. Hold on a second. The first question was, where do you see the public cloud storage solution providers like Dropbox and SugarSync?
We think these companies have been around for quite a few years. There are no names, but we also see them, including Box in that conversation, moving from consumer-based solutions, and now they're starting to go to the enterprise. I think Dropbox has had some announcements recently around, getting into the enterprise. Box is definitely ahead of the game in that sense. they have really been marketing towards the enterprise. They have added a lot of partners very quickly before companies like Dropbox. But we think from speaking with customers, the functionality of Dropbox, is pretty good. So I think it'll be a competition if Dropbox, goes down the same path as Box. If Dropbox remains more of just a storage provider, we think it probably won't gain traction in the enterprise, but if it builds out its portfolio and integrations and networks, then, it does have the chance to start driving more adoption there.
Okay, looks like we have two questions from different people that you might be able to join together. The first question was, what strategic geographics moves are you seeing? And the second I would be interested to know anything in particular you see from the LAD region, anyone moving faster, slower here for any reason?
Yeah, absolutely. So we have seen an increasing geographic shift in terms of the businesses that we cover. There is a geographic flavor to the benchmarks, and we've seen a shift in growth occur, transitioning from the Americas region, somewhat over to EMEA, but really Asia-Pacific and some of the emerging geographies increasing. We've been doing some coverage of countries like Brazil and, seeing tremendous triple-digit growth in terms of as they get on the early cloud adoption trend in as well as the vendors that are going to be providing those services for them. So if you look at a country like Brazil, we've seen over the past 2 years a lot of investment from the big Americas players, the big US-based players. Amazon, I believe, has built out data centers there. We've seen a number of the service providers establish the infrastructure needed to support that region. So I think, but obviously there's always that local provider. And with cloud overall, we've seen, particularly in the early stages of the market, a lot of regional players. We've covered vendors like Ramco in the Asian market, fairly local provider, but their scale is such that they really have a solid customer base. They were an early provider of cloud services in that region. So you run into the same type of competitive environment where the largely US-based vendors, as they look to go global, they will run into these more local providers, but that have been able to grow to a certain scale that it's not as easy to come in and immediately have an impact on the market. There is that built-in preference and for local vendors in a lot of cases, and that they're really targeting a lot of the growth. So it will be a more diverse market as you look into the emerging geographies.
Okay, the next question we had come through. Do you have any view of the next generation data services of the future besides what you've already mentioned?
So it's kind of a broad question, but I'll dive in and define it and do the best we can with the data center services of the future. So when we look at how within enterprises data services are delivered, one of the continuing attributes about cloud that we see even in recent customer studies is this speed of deploying solutions, the agility with which you can roll out new services and get up and running very quickly. That's an enduring attribute of cloud, and I think that speaks to a shift as we see for the role of IT within a lot of the organizations with which we interact, where IT is going from being a capacity provider, someone who a lot of times is quite reactive in terms of getting requests, needing to figure it out on the back end in terms of how those are delivered and doing it in a way that meets their budget and their delivery requirements, to being a much more active participant in the business planning stages and the identification of the right delivery method for those workloads. So the services and the change in terms of how they're delivered, we see it being a much more agile approach that breaks from the legacy infrastructure and the requirement for the way that services have been delivered. And when you do that, it opens up a lot more access to new sources of data, the ability to connect different applications and look at data that once was previously siloed in a consolidated way. Those are all things that we see being enabled by cloud, and some of the dynamics within organizations that will be key to actually making that happen.
Yeah, and to mirror Allan, I think the last point he touched on, having a platform that really pulls all the data together and gives people a window pane view, a dashboard view of their entire IT infrastructure or and their warehouse. Is anything, one view into how their entire business is running, I think is key. And I think security and BI will start being just built into all of these solutions. I think eventually they're probably, may not be security-only vendors or BI-only vendors, but that these two functions or capabilities will just be needed in every single product.
Okay, we have several questions that have come through, and it looks like we're up against the end of the presentation. So we're going to do one more question, and then for those of you who have questions that have been sent in that we don't answer publicly, we'll have the analysts follow up with you via email to set up additional conversations. The last question we have, guys, is what is the best opportunity for cloud providers to differentiate their service to the likes of Amazon and Microsoft?
Yeah, I think that's the key question for cloud going forward. The baseline capabilities, competing on price, being able to deploy very quickly has been able to carry the market for quite some time. But as you see from the changes that we've highlighted in terms of targeting specific lines of business, user personas, verticals, geographies, it's going to be all about taking this broad public cloud and segmenting it so that you get closer to the solutions that customers are ultimately trying to achieve. So, the ways that can be done. So vendors like IBM has been very successful in targeting specific business units within customers, CMO office, chief of HR, taking that approach. And so I think there is validity there that if you can provide customization based on the users within the organization and their specific focus and compliance, the objectives for their role, there's value in that. And I think that's able to be done at a global basis. So in terms of the payoff for that, it's much more far-reaching than we do see, the geo specialization. There's opportunity in that, but obviously it's difficult to do that on a global scale and have that type of disparity in terms of the offerings. Jill, anything else to add around where you see these vendors going in terms of that specialization?
Yeah, I think building out a developer base as well as an MSP base will really be key. So a lot of AWS and Microsoft don't really sell direct, so they definitely do have these capabilities. But having a targeted focus, like Allan said, will be great. So, for example, a cloud vendor selling just to telcos to have telcos offer cloud to their smaller customers. There's so many different angles. I think vertical customization, LOB customization. And I think the business model is going to be a differentiator. The business model for some of these cloud vendors, even for Amazon and Microsoft, is extremely different than it is for an HP and IBM. So I think there's definitely a lot of ways to differentiate, but they're all going to be based on just targeting smaller audiences with more customization.
Mm-hmm. Yeah, that's a good point there at the end, is that there's only so much specialization each vendor is going to be able to do, and make the business case for that, so that providing a platform to engage partners and doing it in a way that is vertical specific. So if you look at some of the networks like the New York Stock Exchange, their push around cloud services, very targeted within a vertical, but you still have that platform for partners to come in and provide value around it that makes it more scalable.
Okay, thanks guys. Thanks everyone for your questions. I know that there are several out there that did not get answered. The analysts will be reaching out to you directly to either answer the questions or set up conversations to get you those answers. And I still encourage anyone out there who has any last-minute questions to send them through now, or you can reach out directly to the analysts at their email addresses listed here. Additionally, as promised, here are all the social media links. We encourage you to follow Allan, Jillian, as well as TBR at the Twitter handles listed here. And I have included the SlideShare and YouTube links. The presentation and the slides will be uploaded by tomorrow. We'll also be sending out the slides to everyone who attended today, so you can just watch your email inboxes, and the deck will be sent out directly to you guys. Thanks, everyone, for your time, and thanks for the presentation. Before you sign off, there's a quick 3-question survey that we're fielding at the end of these webinars to make sure that we are doing a good job and providing a value to you. So if you could do us a favor and take the quick survey, that would be great. We're using your feedback to improve our presentations quarter to quarter, so anything that you do tell us will be taken into consideration as we are creating these presentations. We've enjoyed this interaction, and we look forward to continuing the dialogue next quarter. I'm going to leave the chat function open for another couple of minutes in case there's any last-minute follow-up action items that you guys have. Otherwise, we thank you for your time, and we look forward to speaking with you guys all again next quarter. Have a great afternoon, everyone.